Here's a question every Forex trader is asking today, the 27th of July, 2026. Why can't the euro break higher against the US dollar, even when the signals look positive? According to Brown Brothers Harriman, the answer is simple. The euro is showing genuine recovery signals this week, but the path above is crowded with resistance, and BBH analysts say any upside from here looks limited rather than the start of a fresh rally. That's a sharp contrast to the optimism building in some corners of the market just days ago. Traders who bought into the bounce are now facing a currency pair that keeps stalling exactly where it needs to break out. So what changed? BBH points to persistent dollar demand as the main obstacle. Even as Eurozone data offers pockets of encouragement, the dollar keeps absorbing selling pressure and bouncing back. This lines up with Societe Generale's latest research on European central bank policy, which flags a tricky rate path following the sharp rise in Eurozone bond yields in recent weeks. Higher yields might normally support the euro, but when they arrive alongside Federal Reserve caution on cutting rates, the interest rate gap that traders watch closely stays wide enough to keep dollar buyers interested. It's a tug of war, and right now the dollar side has the stronger grip. This isn't just an abstract chart pattern, it's affecting real money today. European exporters selling into the United States are getting less favorable conversion rates than they'd hoped for after the recent bounce. UK and European holidaymakers booking US trips are finding the dollar still expensive. And it's not isolated to the euro either. HSBC issued a similar warning today on the British pound, flagging downside risks from softer UK economic data, which shows this is a broader dollar strength story rather than a euro-specific problem. Meanwhile, gold has also been under pressure this month as the stronger dollar makes the metal costlier for overseas buyers, reinforcing just how dominant the dollar theme has become across markets. Looking ahead, BBH's view suggests traders shouldn't expect a clean breakout for the euro in the near term. The key thing to watch is whether upcoming Eurozone inflation and growth data can meaningfully shift ECB rate expectations, because without that catalyst, the dollar's yield advantage likely persists. On the US side, any signs the Federal Reserve is edging closer to cutting rates could finally give the euro room to run. Until then, BBH's message is one of caution: treat rallies as tradable ranges bounded by resistance, not confirmation of a new trend. The bottom line from Brown Brothers Harriman on July 27, 2026 is clear: the euro's recovery signals are real, but they're not strong enough yet to overpower dollar demand. For anyone trading, exporting, or simply planning a dollar purchase, the message is to stay patient and watch the data, because until the interest rate gap narrows, the ceiling on euro to US dollar looks firmly in place.